Okay, hello, you are welcome. Now we'll be looking at price action. Okay, so before we look at price action, like I always suggest that you have to go through the candlestick trading Bible. You have to go through it already so that you understand everything on it. You have to go through them through the candlestick trading Bible, the PDF. Go through the PDF, make sure you read it. After reading it, then what I'm trying to do here is just like a summary and then giving you a better understanding of it and simple concept to be able to follow it accordingly and make money with it based on my own experience. Okay, now looking at price action. Introduction. What is price action? According to my search on Google, refers to the pattern or character of how price of a security behaves. Okay, if you have read the candlestick trading Bible, you see that price movement or behavior is in three phases. The first one is uptrend. How do we know when price is uptrend? Okay, you can see price is making up move, down move, up move again. Then the previous up move is called higher high. The previous low move is called higher low. Okay, now let me show you an example. Looking at this chart, you can see from my left hand side, you can see what is happening here. This is the high point, this is the low point. Candlesticks are just forming different type of candlestick. Then we have this pullback, we have this one, this is the higher high. Then we have this one, this is the higher low. Okay, then we have this one that came to take out this higher high. Okay, this is now what our higher high, higher low, higher low, higher high. So just like that. Okay, it is very easy. When we get to our candlestick pattern and all of those things, you understand it more better. This is just an illustration for now. So the same principle we apply when we are looking for downtrend. How do we know when price is making that downtrend? The price will make a series of candlesticks, forming different candlesticks, and then you will see that after some candlesticks there will be some pullback, and then the pullback again will come down to continue this move. These are what this is going to be known as downtrend. And in downtrend, the first point that price is going to make, that is going to use to make a pullback, is called lower low. And then at the top point after price has come down again, is now called lower high. All these things, they are things that you do not have to know their English, their grammar. You just have to understand it and know how to use them. Then the last one is ranging or sideways market. Ranging or sideways market, when price is just moving up down, but not breaking this higher high, it's not breaking this lower low, it's not even breaking anyone, it's just in between a range. So you can see that this first one, our uptrend, price is taking out the higher high. After forming the price, first of all formed the higher high, then came down, formed a higher low, then went up to take out this higher high. That is our uptrend. The same thing for the downtrend. Price went up, came back to take out this lower low, forming lower high and then lower low. So this is downtrend. But when it comes to sideways market, it's not advisable to trade it. So I will not make much emphasis on that because you will see it as we continue trading. Now, let's talk about how to identify each market movement or behavior. You can see that I'm trying to be fast with all this information. Why? Because everything is just on the PDF. I'm just trying to make a summary of the most important things to save us time and refresh our memory. The first thing first that will help us to identify market movement or behavior is when one pullback, okay, takes the low or high of another pullback. For us to know when market is a downtrend and when market is an uptrend, that is how we are going to know it. When one pullback takes the low or high of another pullback. What I'm trying to say is, price is making downward movement, making upward movement, making downward movement. How do we know this is a downtrend? That's because the first movement, down movement, is called what? Impulsive. Then That is number one. Number two is now called what? Retracement. To a particular point, anywhere in the market, to a particular point, you don't have to stress yourself about that. Then price came down again to come to this low point that was formed. After price has taken it out, then you can now say this is what? A downtrend. Alright? So after forming such downtrend, the point that broke the previous low, this is lower low, right? And this is lower high. So after price has taken out this lower low from pulling up and coming down, after price has taken it, that point that price has taken it is called what? Break of structure. But all these things are just grammar. You just have to know that this is how price move. You know that price does not move in straight line. Okay, it always moves in zigzag way, like coming down, up, down, up, down, up, down. That is just how this trading is all about. Okay, so this is downtrend. Then when we say uptrend, price is making impulsive move. That's 1 and 3. That's number one, impulsive move. Price come down, retracement, and price go up again to take out this high points, higher high, and then higher low. Okay, so after price has done that, this point that price used to take out the higher high is now called what? Break of structure. You just have to know it, don't cram it, understand it. I believe this would have be refreshing your memory from reading the candlestick trading Bible. I recommend it. Very, very important. Now, one thing you might not notice from the candlestick trading Bible is that there are different type of market structure, or let me say pullbacks. I don't want to speak English or grammar here. Okay, so pullbacks. The first one here is impulsive. Okay, the second one is what? Retracement, or we call it pullback. So then before price will now make this type of movement, after price has made this movement, we can see that this is the last lower low. Okay, this is lower high. Then the point that price, so we want price to come back to this lower low, the previous lower low, and then probably tap on it or something and continue to move downward. Okay, but you will observe sometimes after price has formed this type of structure, price will not just make a straight move to this previous lower low. Price will be moving in zigzag. Okay, like we said, price can move in zigzag way. So after forming this low point, price will not be moving up, down, up, down, up, down, before it gets to the previous lower low, lower high. Okay, confirming that this lower low has not been what? Confirmed. Okay, so you just have to know all these things as we progress. Please, as we progress inside the lesson, we get it very well and understand it very easy. So the first point here, this move is called what? Major pullback. Then when price is going to retrace, this retracement move is now called what? Our minor pullback. That is the first scenario that can happen. Another scenario that can happen, we see price is making different pullback. After that, lower low, lower high. Yes, then price is trying to make another lower low here by making this pullback, different pullback, higher low. This is minor pullback. Okay, with that minor pullback, price has now gotten to the previous lower low. Therefore, this lower low is now what? Confirmed by that move, that price has now gotten to the previous lower low. When that has happened, meaning that the lower low here is now confirmed, then you can see that price can be making another minor pullbacks before it will come to this main lower low. This is the main lower low now, because the previous lower low has been tapped. Okay, price has gotten to that vicinity, meaning that this now lower low is confirmed. So we want price to come back to the previous, this new lower low. Okay, so price can be making different minor pullback too while coming back. You see, price is just making different pullback, coming back, and then before we will now take out this new lower low, which is the major lower low. These things, please watch over and over again. You understand what I'm talking about. Now let's use this Euro USD on the daily time frame as an example. Like I said, this is just how your chart is going to look out, plain chart. So you can see the first pullback there, another pullback, then we have this pullback, we have this pullback. These are the major, this is the lower low, right? And then this is the sorry, this is price is making bullish movement here. Price is making bullish movement, down movement, up movement, down movement again, making it that this high point is now confirmed as our what? As our higher high, and this low point is confirmed as our what? Higher low. Then we see price is making different pullback to this point, making this what? This higher high to be taken out. When the higher high has been taken out, then we want price to continue moving downward and continue to move upward, so that here will now be our new higher high, and then here will be our new lower low. But you see what price is doing here? After price has formed, taking out this higher high and formed this higher low, price is coming back downward, but it's not just coming back downward in a straight way, okay? So price is making pullback and then making minor pullback. You can see these minor pullbacks, they are there. Minor pullback, price is just making minor pullback, minor pullback, minor pullback before it now gets to this low point. When it gets to this low point, we can now say, okay, probably price is trying to change trend or give us another type of market reaction. All those things, we will learn them more, but we have to know that we have major pullback, okay, then we have different minor pullback. This is just an explanation for you to understand, okay? So we are going to go into the next one in the candlestick patterns.